Hello, everyone. My guest today is Jeremy Almond. He spent the last 15 years in the tech industry as a serial entrepreneur, startup advisor, and occasional investor. He's helped dozens of B2B companies drive adoption of digital commerce and is still an active board member at a number of fintech companies. He started his career in technology as an engineer at nanotech startup Digital Instruments, which was acquired by VECO. Jeremy holds a BS in computer engineering from the University of California and a master's in business from the University of Massachusetts. All right, Jeremy, are you ready to take us to the top?
Hey, how you doing, Nathan?
I am doing well. I have to ask first because, in my log cabin when I was growing up, right next to the entry door, we had one of these old crank phones on our wall, and I'd love to mess with it and hear the ding. You have a collection hanging on the wall behind you. What's the significance?
I'm actually I'm sitting at one of our investors' offices, and so I think they built one of the first mobile payment apps. This little company called PayPal, and so one of the first money movements ever was beamed over the phone. It was a very famous investment. And so I think they memorialize that with these old phones around their office.
That's pretty cool. So I want to ask what the company does in a second, but you said you're at your investor's office. How much have you raised to date?
I've raised about 12 million to date, more or less. So.
Okay. And then break down the company for us. What do you guys do? How do you make money?
Yeah, so Paystand's a B2B payment network. So a simple way to think of us is what Venmo does between consumers, making payments digital, we do for commercial companies. So we help B2B companies actually get their money faster, cheaper, and in a more automated way.
Jeremy, can I think Bill.com here?
Yeah, I think so. So Bill.com is really about automation. And what we are is actually changing the payment network. So most of the money movement itself is basically using technology before the internet. Most of the technology is sort of built in the 70s. We actually own our own payment network. We use something called the blockchain, which is sort of a really new way to think about financial services in general.
Okay. So at the risk of getting too technical here, walk me through how a company to another company might actually use this. Can you give a real example, name the customers, et cetera?
Yeah, so classic example would be an insurance company. So we work with a lot of what we'd call unsexy industries where there's paper checks in the process. So we have insurance clients, for example, that are normally billing folks like you to take their claims payments or whatever, their monthly payments. Normally it's a manual process. You're paying by paper check. The critical thing for insurance is if you don't pay it on time, you don't have coverage. So it's really, really important for the insurance companies to get their money faster, cheaper, and automated. Insurance company has two bad choices today. They either can use paper checks, which means they have to wait, they have to collect, it takes them a long time. And then if they don't get the money on time, basically you lose your insurance coverage for their business. Or they run and they take credit card payments. So, you named off one of the credit card companies. Problem with the credit card payment is basically it costs 3% for you to receive. All credit card companies cost this way. So if you're, let's say, we work with mid-sized companies. So if you're a $50 or $100 million company, just to receive your money might cost you $1 million, which is, absolutely insanity for effectively moving ones and zeros back and forth between banks. So what we do is help them move their money automatically, digitally, and without fees. And so that's a big, big deal.
So I forget which chain it was. Maybe it was Walmart just announced they weren't taking, I think, Visa credit cards anymore because of how aggressive they are. Are they about to announce that they have fallen in love with Jeremy Almond and Paystand is replacing Visa?
Yeah, I mean, so honestly, the retailers hate credit card fees, but I think they've got a bigger challenge, which is, we as consumers, we use credit cards all the time. I've got a cup of coffee here. I swiped my credit card to do it. But it's different in the commercial case. So in our commercial case, right, these are companies that you've worked with for, a decade. You have contract terms that salespeople have argued about for years that say, I'm going to pay on net 30 terms, which means when I get an invoice, I'm going to pay 30 days later. So there's very, very clear sort of terms that dictate how you get paid. And so really what Paystand's focused on is making sure that process can be automated. And those don't really need to go through credit cards because, at the end of the day, I know the company, I've got terms associated to it. So the credit card model just doesn't work there.
How do you make money if you're not taking a percentage?
Yeah, so we kind of think of us as like the Netflix of the industry, which is we're trying to move the industry from a transactional model, sort of this blockbuster go in and rent something, to a fixed cost SaaS model. And so we charge a monthly subscription amount for a customer, and it's sort of all you can eat.
And what would you say? I'm sure you have loads of different cohorts, but on average, what's a customer paying you per month?
Yeah, so on average, our customers pay us about $1,500 a month. They go up much higher, and there's a few that's a little lower than that. But
And if I pay you that, what am I getting? Is it you can go, process up to 100 million of transaction volume per month before you have to go to the next level?
yeah, I mean, so normally the cohorts can be, let's say $1 million to $10 million dollars is sort of a certain size company, 10 million to 50 million is a certain size company. So generally, the cost for us is just around support. So a company that's got 5,000 employees is a little bit more support for us than a company that's, I don't know, 5 employees. But
And put this all on a timeline for me. When did you launch the company?
2014. So we've been at it about 4 years now. Really, really early days, especially when you look at blockchain. We think we're sort of inning two at a very long game on trying to change how commercial banking is done.
And how many of these commercial entities are using you today in terms of, how many customers you're at?
Yeah, so we have about 50,000 businesses on our payment network. If you put that into scale, there's $18 trillion in commercial payments in the U.S. alone, still done in paper checks. So we've got a really long way to go. But I think we're one of the fastest growing companies that are using blockchain in a real meaningful way, and so I think that's important. And we're doing material volume at this point. So early days, but it's going okay.
What's material volume? I mean, are we talking 10 billion a month, a billion a month? What's material in your perspective?
So at this point we're doing tens of millions a day, right?
Okay.
And so so it's pretty decent. Right?
Okay.
So.
And then if I take my math is going to be wrong here, so you're going to have to correct me. If I take those 50,000 customers times that average price point you just said of $1,500 per month, that puts you at 70. You guys are making 75 million a month. You would be taking me out to a steak dinner, and we'd be doing this interview in a penthouse if that was the case.
Totally.
Where are my numbers wrong?
Yeah, so we have sort of two sides of the network. We have a receivable side and the payable side. So you can think about like Venmo. You have two people on both sides. So we basically charge for the receivable side of the product because effectively, you as a CFO care about speeding up your time to cash, getting your money quicker and at lower cost. Most of the B2B payment industry actually charges for the other side, which is the payable side. We think that that's actually less important. Our sort of point of view is that's a vitamin problem, meaning, it's nice for your AP to not write a paper check, but that's not super, super critical for the boardroom level. And so we effectively charge a very, very different amount on the payable side than we do on the receivable side.
I see. So that 50,000 number included both sides.
Both sides. Yeah, exactly.
On the receiver, break that down for me. On the receiver side, how many are you working with?
So we don't publish those numbers, but the receivable side, you can think of it, it's an asymmetric network, right? Most receivable companies, right? Like they have at least 100 customers generally. So you can kind of think about how the ratios will play out.
Yeah. I'm just trying to get a general sense. If we're talking like your high touch,
I know you
100 enterprise customers, or if you're talking maybe more mid-market, maybe you have 10,000 folks on that side. Would you say you're more high touch or?
We would consider mid-market, so you can think of us as like mid-velocity, like a HubSpot or a NetSuite size type company. So more than 100 and less than 10,000 customers.
Yep, fair enough.
On the side. So.
And then what you're only 4 years in, but it sounds like you're growing in a meaningful way. What are you growing at right now year over year?
Yeah, so right now year over year we're growing. So the first couple of years we grew 5x. This last year we grew at nearly 4x, and this year we'll probably grow at 3.5x. So
okay. So just to be clear, from 2016 to 2017, and you're talking about transaction volume, or actually your revenue 4x?
Both. Transaction volume is probably a little higher. So it's transaction volume. I think we grew 5x last year. So.
Okay. And you're aiming for, you said 3 or 4x this year?
Yeah, that's right.
3x this year. Very good. And where's most of the growth coming from? More volume through current customers, or building the network, like getting new people in the network altogether?
Yeah, it's mostly net new right now. I think one of the things we certainly will grow as the company gets more mature is so how do we continue to grow the base internally? One of the good things about payments in general is it's a very, very sticky system. The vast majority of businesses in America still are using paper checks, which was built in the Middle Ages. So something from 1200 AD hasn't changed, which means once we get in there and we move over to digital, it's a very, very sticky product. But right now we're really focused on growing the network. We're really not as focused on growing internally the sort of business lines. We will do that eventually, but not now.
I won't push any harder on this after this question, I promise. When do you think you'll pass, call it 5 million in ARR in terms of a run rate?
We're not far off from doing that.
Do you think it'll be this year?
We're not very far off now. So,
okay, that's good. That's great.
So,
Walk me
could
through
be a quarter, could be this year, whatever.
Good. Walk me through walk me through some of the kind of economics around building a marketplace like this. So what is it costing you to onboard one of these new customers typically?
Yeah, we do have, so the economics, we still have to, so we federate with 18,000 banks. So, not everything is like this pure blockchain world yet. We think that's eventually where it goes. But because we have to federate with banks, we have to actually set up accounts. And so that has costs associated to it. And so that's a lot of our costs, is sort of the banking costs of the underlying infrastructure to support whether it's settling back into your bank, or whether it's sort of dealing with the legacy banking infrastructure. I think one of the things we do there is we meet the customer where they're at. So we don't require all 50,000 customers to move over to an entirely digital method day one. And our point of view on that is it's sort of like Netflix, right? These days you and I, we binge watch Netflix, right, on Saturday, watching Stranger Things or whatever. It's all digital. It's all HD directly to our living room. But when Netflix started, there were still a lot of DVDs. So what did they start doing? They shipped, red envelopes everywhere, just to get people into the behavior of, hey, don't go into Blockbuster. Instead, move to this model that's going to be a different pricing model, an all-you-can-eat model, right? And we're going to move you over to this digital thing over time. And so we're sort of in that process right now. People still, very heavily reliant on commercial banks. And so a lot of our cost is sort of using the legacy infrastructure to move people over to the digital.
How do you incentivize those banks? Is there a kickback per person they sign up, or no, it's not that straightforward?
Yeah, so we don't sell. It's interesting. We don't sell to the banks. We certainly partner with them. We had a big announcement about a partnership a couple weeks ago with Silicon Valley Bank and First Data. But we generally look at the banks as partners, not as sort of economic drivers for us. And the thing that with banks is, this might have been different 5 years ago, but the banks know where they're good at and what they're not good at. And the reality is they're not software companies, and companies like us are not banks, right? And so, I think we're kind of learning who's the right lanes to stay in, which is we can create great enabling software for a digital age, and a bank can do all of the things that they're good at, which is around regulatory, licensing, compliance, sort of trust, risk models, those sorts of things. So.
What does your churn look like?
Yeah, so that's one of the things I think we're really proud of is, from a net basis, we have negative churn. And
you're talking, you have net negative revenue churn annually?
Yeah, correct. So, and again, I think that's because if you, once you get people into a payment network that's entirely digital, you're not moving back to paper check, right? And so, I think we have a very defensible business, which, we feel very blessed about. And, we're continuing to make the product more mature over time.
What's your team size today, Jeremy?
We're still small, 30 people. We're trying to, like everybody in the Valley, I think, grow as fast as we can. So
you said 30 or 13?
30. So yeah, so very lean team.
Yeah, sorry, Jeremy, I can't. 30 or 13?
30.
30, great. And is everyone based? Where's everybody based?
Yeah, most everyone is based in our California office, which is in Scotts Valley, which is great. It's not far from San Francisco, and it's also very close to the beach, which is sort of great mix. And then we have a small office that's growing pretty quickly in Guadalajara. So that office, we opened up at the beginning of this year. And then we have a very, very small office in Canada, which is basically a fulfillment center.
Got it. Very good. Let's wrap up here with the famous five. Number one, what's your favorite business book?
Famous business book, Founders at Work, probably.
Number two, is there a CEO you're following or studying right now?
Oh, I would say that, you have to follow Benioff, right, in the B2B world. So.
Yep. Number three, what's your favorite online tool for building your business?
Right now, I'd say we're big HubSpot fans.
Number four, how many hours of sleep are you getting every night?
Probably 4 to 6.
Okay, so not bad. And what's your situation? Married, single, kids?
Married, very, very happily married, and excited to be going on a vacation with the love of my life in a week.
And no kids?
No kids.
All right. And how old are you, Jeremy?
I am, let's see, how old am I? I believe I'm 36.
36. All right. Last question.
I think so.
What do you wish your 20-year-old self knew?
I don't know. My 20-year-old self was very happy, and my 30-year-old self is even more happy. So, I think life is just it's a blessing, and I feel grateful for kind of the journey.
Guys, life is a blessing. Enjoy the journey. Again, back in 2014, launched Paystand, a B2B version of a thing like a B2B version of like a Venmo or something like that. Paystand is growing fast, $12 million raised. They grew about 4x year over year from 2016 to 2017, aiming to grow about 3x or 4x this year from 2017 to 2018. Their customers pay them, call it on average $1,500 per month. The innovation is they're not charging on a percentage of revenue through the platform model or percentage of receivables through the model. It really is a flat fee. So hoping to hit that $5 million ARR mark here in the next quarter, 2 quarters, or 3 quarters or so. Healthy economics, net negative revenue churn annually with their team of 30 based between California, Guadalajara, and Canada. Jeremy, thanks for taking us to the top.
Awesome. Thanks, Nathan. Appreciate the time, buddy.